Hey, Sarah here, and I have Mike with me because Mike needs to tell us a little bit about how the changing interest rates affect what you qualify to purchase. And on the end, I'm going to ask him a little question about credit scores. So be prepared for that, Mike. But
All right,
let's hear
perfect.
it as far as interest rates go.
Yeah, so I call this little exercise the cost of waiting because I hear all the time where as we get later in the year, like we are just starting November now, we're going to put it on hold. We don't want to move during the wintertime. We want to wait till the spring. And so when we look at waiting till spring, the cost of waiting is we know where interest rates are today, which are still on 30-year fixed, sub 3%, depending on your situation. But we don't know where interest rates are going to be in a month from now, 2 months, 6 months from now. So if by chance, and we always see volatility around election time, which we're in right now, and we don't know what it's going to look like a month from now, let alone 6 months from now. So the cost of waiting currently, if we are looking at payments on a purchase of a $300,000 property, putting 5% down, currently that interest rate is 2.75, 2.875% fixed, 30-year, no points, no
Not
origination
for
or
refi,
discount.
we're talking a purchase interest rate here.
Yep, not for refi. However, refinance interest rates are very close to that, at least for the refined lending who I work for. But so 300,000, 5% down, 2.875% interest rate, 30-year fixed, will get you a monthly principal and interest payment today of $1,183 per month.
Principal and
So
interest,
that's principal
not
and
taxes
interest.
and insurance. Yep.
That's correct. Mortgage insurance not included there either. So just the principal and interest. If the interest rates go up to 3.875, so 1 point. So in the time that you're waiting, if the interest rates move up 1 percentage point to 3.875, which is still a great rate, but that changes that monthly principal and interest payment to $1,340 a month, or $157 per month more. Now, when we relate that to purchase price in a home or qualifying, every $10,000 in purchase price is going to impact your monthly payment right around $40 to $45 a month. So when we look at that $157 impact, higher monthly payment, that's going to impact your purchase price qualifying potentially by $35,000 on the purchase price. So if you're qualified to the max right now at 300,000 at 2.875%, if the interest rates go up a point before you start the process while you're sitting on the sidelines, that could potentially drop the purchase price you qualify for $35,000, so down to a $265,000 purchase price. That's a completely different house. Yeah, and you can talk about that, Sarah, because that is a completely different home in those two price brackets. So that's the cost of waiting. I'd say we'll let Sarah touch on this right now, but at least from my perspective and offers that are going out, we're not seeing quite as much competition as we move into the later parts of the year, into the winter time. So that potentially could be a benefit with you to continue shopping. Still very busy. Interest rates are still great. So if your goal is to purchase a home, I would say continue to shop, just from my perspective.
Well, and I know inventory tapers off a little bit in the fall just because sellers are trying to get ready for the holidays, or, whatever they're doing, right? Or they don't want to try to move in January. I hear that complaint all the time. I'm not loading a moving truck in the coldest month of the year. All those things can be negotiated. Let's just start with that. But a couple points, like what you said, I have people who are waiting because they're trying to improve their credit score. So improving the credit score reduces the interest rate that you will receive, right?
Yep.
This is why I'm bouncing back to this. So now we're talking about the cost of waiting. As long as the interest rates don't go up too much, what are those tiers of credit scores that they're trying to step into?
Yes, yeah, great.
Approximately,
great
because we know it changed with COVID.
That's yep. With
There's
the COVID disclaimer. Yep, the COVID disclaimer.
But as of today, November 3rd.
Yeah. As of today, and we're talking, if we want to go from FHA financing or government-backed financing, credit score minimums are right around 620 for your qualifying credit score. And how that works, you get a credit score from each bureau, TransUnion, Experian, and Equifax. For mortgage qualifying, it's the middle score that we use. So if your qualifying scores in the lower to mid to upper 600s, we're looking at FHA financing, 3.5% down payment. If we're at that 680, 670 or above range, we work with a credit simulator that says it's like a what if calculator. If you take this action, this is what we'd expect your credit score to be in 30 days. So it gives you enough time to make that change and have that payment. If it's paying down a credit card to below 30% of the maximum credit to get a credit score boost, if it's paying off an old DirecTV collection that's been sitting around there since for the last 6-7 years. Things like that, paying down a credit card, paying off a small collection account can drastically increase your credit scores. And what we'd want to see to get into that conventional financing, if you have 5% or more down, you're 700 to 720. We could work depending on what your debt to income ratios are with that new house payment. Ideally 720 and above. The credit goes in buckets and they're about 20 points per bucket. So 700 to 720, 720 to 740, so on and so forth, up and down that range. But the higher your credit score, the better interest rates you're going to get. And it all the factors come into play in terms of how much are you stretching your monthly budget for your debt to income ratios, your gross monthly income divided by the debts that show up on your credit report and your new house payment. We want to keep those around 45% or below. However, if we have other financing with FHA financing or even conventional, if we're above 720 for a credit score, we can push that between 45 and 50% to get you in that home that you want. If you're expecting a pay increase in the next year or something where you're comfortable with that payment and you're good with that budget to go with. But it's really 20 point buckets. We take a look at credit simulators if we're in that 680, even to get you up to 700 or 720. And if there's a lack of credit, you'd be amazed at how much improvement you'll see on your credit score by just getting a credit card, $300 limit credit card, putting $10 on for a balance in 30 days. That could substantially increase your credit score. So that's a service that we offer free to take a look at credit scores. So if you don't know where they're at right now, but you want to get ready to purchase a home in the next 6 months, 12 months, it's always good to start early. We'll take a look at that. We'll run the simulators and get you on that path to get that credit.
Call Mike. Don't go online and do the free credit report website. Call Mike, say, listen, let's do this deep dive into what kind of changes I can make, or if I should just gung-ho ahead right now knowing the interest rates, because that could be the situation. Like you said, on your side, you're seeing less competition. I'm seeing a little less competition in the market right now, but it's really not like drastically less. It's still, if the house is amazingly priced or in that tight price range under 300, you still have to make an offer the first day, and they're still not going to accept anything less than full price. And you're just not being driven $50,000 over the price, right? So there's that. But yeah, let's absolutely say, if you're thinking about it, call Mike, get the credit report done, figure out your game plan, and let's just knock one out of the park because of proper planning.
That's right.
Do you have any last minute notes about, how their payment's going to be affected then that way? Because like we were talking about, that lower interest rate means a lower payment for them. Yeah.
Depending on your purchase price amount and your down payment, your loan amount, an 8% in interest rate or a 0.25% in interest rate could be $6 to $15 to $20 a month, depending on how much of an increase we can get and how much more improvement we can get with that interest rate. But even if it's $20 a month, let's say, so 0.25% on your monthly interest rate, $20 a month is going to step up your purchasing power $5,000 to $7,000, which could potentially get you into that house that you want versus fighting with having to make a little bit lower of an offer. So definitely worth doing it, but it doesn't cost you anything. You might as well start soon and get prepared.
So thank you, Mike. We've got other videos on things about down payments and how those things work and closing costs and origination fees and just title fees and all those things. So be sure to check out other videos here. We'd love to help talk you through kind of what can be a complex world of finances when it comes to purchasing a home. So thank you,
That's
Mike.
right. Thanks a lot, Sarah.
Bye.
Bye. All right. Perfect.